Do you know why your salary disappears before month end? So many people work so hard throughout the month, but by the time their salary hits their account, it seems to disappear into thin air. They wonder where all their money has gone and why they are no better off than at the beginning of the month. And sadly, this is because of some basic money mistakes that allow their money to slip through their fingers. So here are 8 reasons why your salary disappears before month end. No. 1. Not having a budget or financial plan. You have probably heard the old adage that if you fail to plan, then you are planning to fail. Well, this is very true when it comes to your finances. If you do not have a budget or financial plan, then you are essentially giving your money away to someone else who will spend it for you. And that someone is usually not very responsible. When you get paid without a budget, you are much more likely to make impulse purchases or to spend your money on things that are not important to you. You may go out and eat at fancy restaurants more often, buy expensive clothes, or take lots of trips. All of these things may be fun in the moment, but they will quickly drain your bank account. At the end of the month, you will be left wondering where all your money has gone. A budget or financial plan helps you to track your spending and make sure that you are not spending more than you can afford. It also allows you to save for things that you want to buy later on, like an emergency fund, vacation, or down payment on a house. Without a budget, it is very easy to overspend and not have any money left over at the end of the month. So before you get paid, sit down and create a budget or financial plan so that you don't waste your money. No. 2. Not paying bills on time. Another reason why your salary disappears before month end is if you don't pay your bills on time. This can happen even if you have a budget in place. If you do not budget effectively and include your bills in your monthly expenses, then you may find yourself with a lot of unexpected costs piling up at the end of the month. For example, let us say you have a credit card bill of $500 due date on the last day of the month. However, you forget about it and don't pay it until the second week of the next month. During that time, the credit card company may charge you a late fee or add interest to your balance, making your bill even more expensive. In addition, if you miss payments on other bills like rent, mortgage, or car payments, you could be charged late fees or have your credit score negatively impacted. These unexpected costs can quickly add up and make it seem like your entire salary has vanished by month end. That's why it's important to pay your bills on time every single month. Make sure you set reminders or automate your payments so that you never miss a deadline. By doing so, you'll avoid late fees and keep more money in your pocket. Number 3, lack of an emergency fund. Having an emergency fund is essential for anyone, especially if you live paycheck to paycheck. An emergency fund is a safety net that can help you cover unexpected expenses that arise between paychecks. Emergencies can be costly and often come at the worst possible time. Car repairs, medical bills, and home maintenance issues are just a few examples of emergencies that can derail your finances if you're not prepared. When these unexpected expenses arise, many people turn to their credit cards or loans to cover the costs. This can add unnecessary debt to your finances and make it even harder to make ends meet. That's why it's so important to have an emergency fund. Having an emergency fund can help you avoid going into debt when unexpected expenses arise. Even if you can only save a small amount each month, it will add up over time, and it's important to start building your emergency fund as soon as possible. You never know when an emergency will strike, and having a safety net can give you peace of mind knowing that you're prepared for whatever life throws your way. If you're finding this video helpful, please give it a thumbs up as it really helps the channel. Number 4, poor health insurance or no health insurance at all. Healthcare costs are a major concern for many people, especially in the United States where healthcare is so expensive. According to the Commonwealth Fund, the average American pays over $12,000 per year for health insurance premiums. This is a huge burden for many families and can completely derail their finances. Additionally, medical care costs can be high even for those with insurance. Deductibles, copayments, and other out-of-pocket expenses can quickly add up and leave you with a hefty bill. Many people are forced to take on debt to pay for medical care, which can have long-term financial implications. Not having health insurance or poor health insurance coverage can be a major financial setback. It can lead to stress, anxiety, and difficulty paying bills on time. That's why it's so important to have adequate health insurance coverage. Whether you get your coverage through your employer or the health insurance marketplace, make sure that you have a plan that meets your needs and budget. Look for plans with low deductibles and copays so that you're not hit with a large bill if you need to see a doctor. By taking these steps, you can help ensure that you're prepared for any medical expenses that may arise and avoid the financial burden of uncovered medical costs. No. 5. Paying too much in taxes. Taxes can be a complicated and overwhelming topic, but it is important to understand how they work so that you can pay your fair share and avoid any penalties. One way that people end up paying more in taxes than they should is by failing to take advantage of tax deductions and credits. There are many different deductions and credits that you may be eligible for, but you need to take the time to research them and see if you qualify. For example, if you have student loan debt, you may be able to deduct the interest you paid on those loans from your taxable income. By doing so, you'll reduce the amount of tax you owe and keep more money in your pocket. Similarly, if you make charitable donations, you may be able to take a deduction for those donations. Taking advantage of tax deductions and credits is one way to reduce the amount of taxes you owe. Another way is to make estimated tax payments throughout the year. By making regular payments, you can avoid the penalties associated with underpayment of taxes. The IRS requires that you pay at least 110% of your prior year's tax if you're re-eligible for this strategy. If you do not make these payments on time, you may be charged a penalty. No. 6. Spending too much on housing. Housing is one of the biggest expenses for most people, accounting for nearly a third of their total budget. However, many people spend far more than they need to on their housing each month. This can be due to a variety of factors, such as living in an expensive area, having a large family, or simply not being aware of ways to save on housing costs. One way to avoid spending too much on housing is to look for ways to reduce your mortgage payments. You may be able to refinance your mortgage at a lower interest rate, or you may be able to make extra payments towards your principal balance to pay off your mortgage faster. Additionally, you may want to consider downsizing to a smaller home or renting out a portion of your home to generate extra income. By reducing your housing costs, you can free up more of your budget for other expenses or even start saving or investing. Remember, while having a comfortable place to live is important, it shouldn't come at the expense of your financial well-being. By taking steps to reduce your housing costs, you can enjoy the benefits of a nice home without sacrificing your financial future. Number 7. Lack of financial education. One of the main reasons why salaries disappear before month end is a lack of financial education. Many people do not understand basic financial concepts such as budgeting, saving, and investing. Without this knowledge, it's easy to make poor financial decisions that can quickly drain your bank account. Additionally, a lack of financial education can lead to a false sense of financial security. You may think you are doing well financially when in reality you are not. This can be dangerous since it can cause you to make impulsive purchases or take on unnecessary debt. To avoid this, it's important to educate yourself on personal finance. Learn about budgeting, saving, and investing, and make sure you have a clear understanding of your financial situation. By taking the time to learn about personal finance, you can make smarter decisions that will help you keep more of your hard-earned money. 8. Lifestyle inflation. Lifestyle inflation is a common issue that can cause your salary to disappear before month end. As your income increases, your spending may also increase at the same rate, leaving you with little to no disposable income by the end of the month. This can happen gradually over time or suddenly if you experience a significant increase in income. For example, if you receive a raise at work, you may feel like you have more money to spend. This can lead to increased spending on things like clothing, entertainment, and travel. Before you know it, your take-home pay is going straight back out and you're no better off than before. To avoid lifestyle inflation, it's important to keep your spending in check, no matter how much you earn. Create a budget and track your expenses to ensure that you're not spending more than you can afford. By being proactive and mindful of your spending habits, you can prevent lifestyle inflation from derailing your financial goals and keep more of your salary in your bank account. In conclusion, there are several reasons why your salary may be disappearing before month end. These reasons include not having a budget or financial plan, not paying bills on time, lack of an emergency fund, poor health insurance, or no health insurance at all, paying too much in taxes, spending too much on housing, lack of financial education, and lifestyle inflation. It's important to be aware of these reasons and take steps to avoid them. By doing so, you can keep more of your hard-earned money and achieve your financial goals. Thank you for watching. Follow, like, and share for more contents like this.